please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It is opening about 0.5% higher, 10,170, and it quickly gave up 2 or 3 points. 150 up on the Sensex, that's again 0.5%, 32,993. So 33,000 also has been given up on the Sensex. But let's look at the stocks. Infosys is getting a thumbs up, 2.5% higher, but we should pull up Biocon. That one continues to maintain that 10%, now 10.25%. So Biocon doing fine, getting a lot of traction, and of course there are a lot of brokerage reports which are putting the price at 525 and 530 and beyond. So that's the stock, really clearly the stock of the morning. Okay, now back to about 8% gains, but still doing exceptionally well. Infosys is holding its early 2.5% gain, now maybe increasing it to about 3%. Indiabulls Housing, Dr. Reddy's, Tata Motors, Eicher Motors, Axis are all the ones that are gaining in the Nifty. I think the auto stocks are getting, Tata Motors in particular is getting a thumbs up for its numbers. SBI, Ambuja, Aurobindo, ICICI Bank. So banks, a bit of an underperformance coming in because some of the bank stocks are not firing much, like HDFC Bank in the red. Bank Nifty is the underperformer today by a little bit. Stocks that are not in the red, Wipro, Tech Mahindra, IndusInd Bank, Sun Pharma, Cipla, HUL, TCS, HDFC Bank, Coal India, Asian Paints, Hero MotoCorp. So Hero MotoCorp has not got the thumbs up that some of the brokerages were indicating. The market clearly worrying. Why should the November number be below even the average of September and October? That clearly is something that will make the market ponder. So that's the market for you. Nifty actually has lost its early morning gain. It's not a 0.5% gain, now 0.25% and still counting downward.
Well, the midcaps are doing much better, Latha, so up about 0.6%. The advance decline ratio is good, 6:1 in favor of the advances. You spoke about Biocon and how that's hit a new high today, up about a new 52-week high, up 10.5%. Syngene is also following suit, so Syngene is up almost about 2 or 3% this morning. That's looking pretty good over there. MT Educare and Z-Learn are also in focus. In fact, MT Educare is now up almost 9% on reports that Z-Learn may pick up about 43% in MT Educare. So look at that as well. Both those stocks are up in the green. Apart from that, you have a couple of others like Videocon, etc., that are moving higher, up almost about 5%. Tata Motors is moving up because of very strong showing in the CV sales. So that's having some, effect on Ashok Leyland as well this morning. That's up in the green. But overall, holding on to 10,150, Anuj, it's just about an okay opening.
Just about an okay opening. And, as Ashwini was also pointing out, the gap up normally on these days is sold into Sonia, the first gap up, because that's the near-term trend. You want to just see if that's working for you or not, and then you take stock. I think we see the low of the morning between 9:15 to 10, and then see if that's getting respected. This is actually a good start for the bears because they got a good gap up, and that's been sold into, and Nifty is now up only 17 points. Midcaps doing relatively better. But let me take Ashwini's first thoughts on market opening. Ashwini, is there a trade here?
See, it's clear that bears are out to again pulverize the market, and you are now hanging around very close to 10,100. So I think Nifty, Bank Nifty, both you should go short on. I don't think we are getting greatly influenced or impacted by global cues. So this is the time to get short. Once below 10,100, the market will catch on to a momentum of its own. Even if we do not fall below 10,100, we'll be basically range bound 10,100, 10,150, 160. But overall, I don't think this is the kind of opening that the bears are going to get scared by.
Okay. Well, Mitesh, any stock on your radar?
Mitesh, we can't hear you.
Scott's early morning is breaking the important lows of around 678, 680 zone. I think if it breaks 675, I think that should signal some kind of a trading breakdown, and we could see more pressure down here.
Okay. And Ashwini, is there any big call for the day?
See, big call is that you probably have financials opening higher, get short on them. Individual here and there, Biocon may move up, etc. But I think the big push remains on the downside, and the financials are the ones where you need to get short.
All right.
When you say financials, you mean the non-bank financials or the banks?
I think both.
Okay.
PSU banks will lose a lot of their gains that they had post recap. Also, NBFCs, etc., they are looking like they're getting into a big correction.
All right, gentlemen. Thanks a lot for taking us through market opening. We'll keep coming back to you. Then carrying forward this conversation, PSU banks, a phenomenal rally, and I think more than half of that has been lost now, if not more. Your thoughts on what's happened there?
Well, some more may go, Anuj, because my view has been consistent that unless you do some structural changes, these kind of pops will fizzle out. I mean, look at the the latest data which has come out from PSU banks to the Reserve Bank of India. I mean, that's not suggesting that these guys actually know or can transform to becoming the HDFC banks and the Kotak and IndusInd banks in the future just by giving them capital. So far, we have not heard anything from the government other than the capital infusion to suggest that there should be a completely transformative or structural change in the P multiple or the price to book multiple that the market accords to public sector banks. I think they had gone up a lot after the capitalization. Many went up 40-50% or 50-60%. So I think a lot of that froth had to come off, and you've seen precisely that playing out over the last few days. If the market correction deepens, it wouldn't surprise me if some of these lost a little bit more ground. Maybe a State Bank of India finds support around 300 and does not go much lower than that, but I think the smaller ones can correct a lot more.
Okay, well, then actually, I wanted to continue that conversation you were having about the Senate bill, the Senate passing the tax bill, and whether that will unleash a global rally. Actually, the EMs have been underperforming DMs already because the US GDP number was good, and now the tax bill perhaps will give them some more brownie points. Within EMs, we have been underperforming. Do you think the tax bill can make a similar difference at all? In fact, it may act to our disadvantage?
It's a good point, Latha, but I think you're probably right in a relative sense, but in an absolute sense, I struggle to understand or struggle to believe that the US will have a powerful rally and emerging markets will actually go down. That usually does not happen.
Yeah.
So say the US goes up 5% in a risk-on rally led by the tax move, if it's cleared. Maybe India goes up 2%. So it will be underperformance, but India going down 3-4% at a time when the developed markets go up 4-5%, that usually does not happen. So let's first see what kind of a risk-on mood is created, if at all, by this US tax move. And it can sort of maybe cushion the market from a deeper correction, because the fall of Thursday and Friday was such, and that too coming after what ordinarily might have been received as good news, sort of gave you the sense that this market was getting ready for a momentum drive on the way down, which is plunging below 10,100 and seeking out maybe a sub 10,000 level like 9,800 or 9,700. That seemed to be what was forming last week, and then we've got this global news. So it's a possibility that this global news stems the fall for the moment, but we'll have to see how the next couple of days play out. But your relative point is certainly taken.
In fact, for now, the market has given up whatever meager gains it started off with. So it's absolutely flattened out. And heavyweights like Reliance, TCS and HDFC Bank are putting a bit of pressure on the market. Udyan, you fleetingly mentioned the bleak GDP growth that, we saw last month. Does that make the case stronger for a rate cut in the policy this week? And would that, sort of improve the sentiment in the market?
No, I doubt it, Sonia. In fact, a rate cut now would be very surprising.
No,
and
impossible.
Given that the RBI has chosen to...
No, actually, it's a higher, it's a higher CPI number and a higher GDP number. So, I mean, it's not even on the cards. Our polls indicate almost unanimous that nobody's expecting a cut. I only meant that. Sorry. Go ahead with it.
No, you're right, Latha. You're absolutely right. I mean, I agree with your outrage at the mere suggestion of a rate cut at this point in time, and I don't think the market is expecting it.
No. The point is, I don't know whether the Reserve Bank's position or what it says is going to make a material difference, because the money market has become very tight and yields have gone above 7%. So, I mean, I wanted your view on that. With yields going up, what's the reason to buy NBFCs after that big rally that they have seen over the last 2 years?
This is an important point, Latha, and I think the market is ignoring it. The last few weeks, or maybe it is not, maybe it is the reason why there is a fairly an air of nervousness in the market, the way bond yields are hardening consistently. It had a brief respite and then it's got right back. I think it's all tying in together. The fiscal math is looking shaky, whatever anyone might say. And, yields hardening, SBI raising its deposit rates. I think there is a general fear that forget an interest rate cut, the way things are moving, if crude goes on to harden to maybe $70 plus, you could actually, I'm not suggesting it will happen immediately, you could argue quite cogently for the case for a rate hike. I think this has the market worried, because you will recall that a lot of the PE re-rating which happened earlier in India actually had at its genesis a fairly significant cooling down in bond yields and the market interest rate. Now that is reversing, but I don't hear too many brokerages talking about the fact that this can lead to, from very elevated levels, some kind of PE compression in our market out here.
Then that's an interesting point. Situation. That's an interesting point, and I just want to expand that. In that case, is there risk of some of the mid-cap portfolios here? Because mid-caps have done well in our market for the last 2 or 3 years. They have had a really benign interest rate environment as well, of course, and a lot of money has moved, a lot of domestic money has moved into the mid-caps. So could there be some bit of risk here, some vulnerability for the mid-caps?
There is, stocks trading at 40, 50 P multiple, as you know, Anuj, can correct 10, 20% without a reason. The simple fact that they're trading at these valuations, for the merest reason, they can give up 20% of their market cap. That's the problem with buying stocks with very expensive valuations. And now you have some of these drifters floating out, which can lead to a market correction. The more you hear people talk right now, we're coming to the end of a year which has been very good. I think there's a little bit of buying fatigue above 10,300, 400, which has crept in. I think the line of least resistance right now is, let's take some profits. Macro doesn't look great. The year is ending. Interest rates are hardening, seemingly. It doesn't look great at this point in time. What's the harm in protecting some profits? That's what you hear from people. This does not mean that this big trend that we've seen from the start of the year is coming to an end, far from it. But I think if we had a meaningful correction, and I think a fall back to 9,700 Nifty from that high of nearly 10,500 would qualify as a meaningful pullback from elevated levels, and that might just create the room that you need to go out and buy stocks at more attractive levels. That is a possibility. We're not talking about the big trend changing out here, but the case for a deeper correction below 10,100 certainly exists.
Okay,
Correction below 10,100, but would you say 9,700? That's somewhat deep. The market has not given such a correction from the previous budget day of February 29th. From the 29th of February 2016, the market has not given us such a big correction. You think that's possible now?
Precisely because it has not done that, Latha. That is the reason for such a correction, the possibility of such a correction. Because I think we have all got lulled into a lot of complacency that you must be buying every 300-point dip in the Nifty. This may also turn out to be one more of those. That is certainly a possibility. But the fact that you've stopped expecting even a 6-7% correction tells me that there is enormous complacency in the market right now. And I think one of these days the market is absolutely ripe to shake that complacency out.
All right. Udayan, thanks a lot for your time today. Of course, we'll keep chatting with you. For now, there's just one other trend which is emerging. Of course, PSU banks, the rally is being sold into. Just keep an eye on ONGC, because crude is going back above 64, thereabout. And I think last time when we had that, we had a huge rally play out on both ONGC and Oil India. So just keep an eye on that. These two stocks are looking up once again. But let's invite our market master for the day, Ratnesh Kumar, MD and CEO of Bobcaps, is with us now. Ratnesh, good morning. Is there enough to suggest that we are now looking at the first genuine correction of this bull market, one which maybe sees a 10% correction, and not the normal shallow 3 to 4% correction that we have seen all through the last year?
Well, I think, in summary, I don't see a 10% correction as at this point in time. There is clearly some element of topping out which is being seen simply because, as I've been saying before, valuation before, valuations are a bit on the higher side, and the numbers aren't coming through, be it in terms of earnings, and of late we've seen some GDP recovery data coming out. So, and also, you have to keep in mind that come the year end, calendar year end, naturally there would be expectation that in the last 2-3 weeks of December, the foreign flows will slow down because of the holidays. So naturally there is an element of you can say stagnation or whatever in the market, but I don't see a very deep correction.
Okay, first up, I want to ask you about Infosys itself. The market started off by giving it a 2.5–3% kind of uptick, but now it's just kind of softened to about 1.8%. Do you think that there's more to go in this stock itself simply because of the nature of the change?
So I think, without sort of going into stock specific, I think IT services, if you look at it in general, the expectations are low from the sector, be it in terms of the demand growth, what could come through, and the valuations. So naturally, any positive development which happens in any of the companies, it is going to have a positive impact on the stock, simply because the expectations at present are quite low from the sector.
Okay, Ratnesh, we have 3 big events that are lined up this month. You have, the FOMC policy, there's the RBI meet, and there are the Gujarat elections as well. Any of these events could change the course of the market, you think?
Yeah, so I think from the RBI action, the expectation is a hold, and I think that is where the market is positioned at, and so anything contra to that, will naturally have an impact on the market. From Gujarat elections, the market is looking at the incumbents coming back, and so that is what is probably priced into the market, or the market is sort of looking forward to that. So any disappointment to the market there will naturally have an impact. On the FOMC side, you could have another sort of I think global liquidity is tightening, domestic liquidity is tightening as well. So that is what presently is priced in. So all in all, there are indeed these events, but I think the year-end liquidity drying up from the foreign side, probably that is going to play out more significantly from the market's point of view. And from India point of view, what I look at is that clearly these, while these events are there in the immediate horizon, the important thing to look at is that for this quarter as well as the next quarter, the base effect will be playing out both in terms of economic data as well as earnings data. And so if I look beyond next 1-2 weeks, I think the number flows should be quite positive.
Okay, just look at Bajaj Finance, by the way,
that is
1680. Yeah, I mean, it forever, took support at that 1780 to 1800 QIP price, but even the strongest ones are seeing.
I was going to ask the same question to Ratnesh.
Yeah.
Ratnesh, is this all the impact of yield touching 7.1 today? It touched 7.1, now is at 7.09. How will that change your approach to the market?
So naturally, you've had a pretty sort of phenomenal run in the finance companies. For good reason, they have been capturing a lot of growth. But now, as the wholesale liquidity tightens and the pricing goes up, clearly, and if the recapitalization leads to more activity coming back in the market from the state-owned banks, then naturally some of the advantages that NBFC had enjoyed, that will be like something that like they'll have to work harder towards. And there is also a sort of valuation stretch which is there on the NBFCs. So in a situation of higher wholesale rates, higher bond yields, I would stay away from NBFCs, especially also given the valuation.
Okay, and what about PSU banks? You'll stay away from PSU banks as well, or do you think there's a fresh lease of life here?
So PSU banks, you know, there are sort of two aspects of it. One is the recapitalization and the capital infusion, which is going to help these banks. But one side is the recapitalization, other side is other stocks. So clearly, there is going to be a lot of capital raising also, which is going to be happening from the PSU banking sector, and there is going to be recapitalization. So there is dilution impact. So the thing that market has to look at is where all of that happens at or around or close to book value, so that basically there is not much dilution on the book value. Wherever that can be achieved, I think that space of the PSU banks are good investment from a long-term perspective. Wherever the dilution is excessive for recapitalization, I think that part of the segment is to be cautious about.
Okay, just one final question then. I know you don't want to talk about individual stocks, but I can't help ask you about Biocon because it is the stock of the day. If not a particular stock, the sector as a whole, pharma, does that interest you now?
No, pharma I've been negative about, and I continue to be negative simply because of the fact that you have lots of regulatory surprises which will keep hitting the sector, and that has been what has been happening. Clearly, in a market where you have possibility to pick up economic recovery plays, possibility to pick up potential next 1 to 2 years, the numbers getting better on both macro and on earnings. Why would I want to go, in a space where some of the variables are highly unpredictable, and that is why pharma I would be overall negative about.
All right, Ratnesh, it's always a pleasure having you with us. Thank you very much for joining in today and giving us your perspective on the market and a bunch of sectors. Well, we have to now give you a great CNBC TV Asian exclusive. Our colleague Utkarsh Chaturvedi caught up with none other than Richard Branson, the big name in the global aviation sector, began by asking him his views on the Indian aviation market, in fact, the global market at this point of time with crude prices rising. Listen to a slice of that conversation.
I think a lot depends on the price of oil. Oil has gone a little bit higher in the last year, which has depressed the aviation market a little bit. But I think good airlines like Virgin Atlantic will continue to do well. We've been in business for 35 years and hopefully we'll be in business for the next 35 years. I think quality seems to win through.
The last time we met in India, and we asked you this question about how interested are you about the Indian aviation market, you had said that you're still trying to make an investment. Does your stand still remain the same?
I think that airlines like Indiegogo have done a great job, and so I suspect we missed the. I think the gate is closed right now, and so we're moving on to other markets.
Speaking about your recent tie-up with Delta and KLM, and Jet Airways 3 days back did the same kind of a tie-up with Delta and KLM. So will there be any of the benefit you will be getting with the tie-up which Delta, KLM and Jet Airways has taken in India?
Indirectly, if Delta and KLM are doing well, we will do well. And we've also tied up with KLM and Air France as well. So I think that it should be. It looks like it could be part of a bigger alliance.
So can we hope for a bigger alliance in the Indian market? But you said the gates are closed in the Indian market. But do you see any small opportunity for an Indian market entry? And if there is a possibility, will you enter?
Maybe I should rethink it. I haven't thought about it for a while because I've had space and I've had Virgin Hyperloop and a number of other things on my mind, and a tennis tournament I'm just doing here.
Yeah.
But you never know.
The last question, sir. The Air India national carrier right now, the government is speaking about this investment of the national carrier Air India. How much value do you think that can have for the global investors?
I haven't looked at the figures of Air India, but government shouldn't be running airlines. They don't make a good job running airlines. The government shouldn't really be running companies, I think. I respect them for looking for people who can run it and run it more successfully.